Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 28th of July. Overnight, the Bank of Japan released the summary of opinions from its July policy meeting. The summary is released ahead of the minutes and outlines the individual views of Bank of Japan policymakers. It was very interesting to see that some officials expressed a desire to wind down their ultra-loose stimulus program somewhat. An opinion was that the bank should reduce its annual purchases of Japanese government bonds to 45 trillion yen from 80 trillion currently. Another indicated that the Bank of Japan should place more emphasis on financial stability and thus it should abolish yield curve control altogether. Finally, a third view was that the bank's target level of 10-year Japanese government bond yields of around 0% should not be interpreted too strictly, implying that officials should be more tolerant of yields rising a bit higher than 0%. The yen did not really react to these points, perhaps because market participants were not at all convinced that the bank will actually reduce its stimulus anytime soon. Even though we hold the same view given very subdued inflation, we will monitor incoming comments from Bank of Japan officials very carefully. Any further signals in the foreseeable future that the hawkish camp among the Bank of Japan may be growing larger could prove positive for the yen. Euro-yen traded lower yesterday after it hit resistance slightly below 130.70, the upper bound of the sideways range that has been containing the price action since the 6th of July. Given that the rate remains within that range, we maintain the view that the short-term outlook is flat for now. Having said that, given that yesterday's slide started after the pair tested the upper bound of the sideways path, it could continue lower for a while. Now the pair is testing the 129.50 support line, where a decisive dip could open the way towards the lower bound of the range at 128.60. Zooming out to the longer-term time frames, we see that Euro-yen is still trading above the prior downside resistance line drawn from the peaks of June 2015. As such, although the short-term path is to the sideways, we still consider the broader one to be positive. Now moving to the US, the US dollar recovered somewhat yesterday ahead of today's first estimate of GDP for the second quarter. The forecast is for US economic growth to have accelerated notably, something supported by the Atlanta Fed GDP Now model. We believe this data will be closely watched as they may prove critical for market expectations regarding the timing of the next Fed rate hike. If growth regains momentum as anticipated, that would confirm the Fed's view that the slowdown in the first quarter was only transitory and is likely to increase speculation regarding another rate hike this year. Something like that could help the dollar recover some more of its latest losses. That said, though, even in that case, we think that the currency's short-term outlook could remain negative. We believe that a strong rebound in inflation is needed before rate hike expectations rise materially and help the dollar reverse its latest downtrend. Dollar CAD traded higher yesterday after it hit support at 124.15 and then it emerged above the 125.25 line. The price structure still suggests a downtrend, but for now we see the likelihood for yesterday's rebound to continue a bit more. Accelerating US GDP combined with a flat growth rate in Canada later today could prove the trigger for the continuation of yesterday's corrective wave. A break above 126.15 would confirm the case and may pave the way for extensions towards the next resistance of 127. Now, as for the rest of today's highlights, during the European morning, Germany's preliminary CPI data for July will be in focus. The forecast is for the nation's inflation rate to have ticked down. Even though such a decline could reverse some of the euro's latest gains, given that Germany does not report a core CPI rate, we believe investors will focus primarily on Eurozone's core CPI print due out on Monday in order to gauge when and how the ECB may act next. From Sweden, we get GDP data for the second quarter and expectations are for growth to have accelerated notably from the previous quarter, which could support SEK. We also get the nation's retail sales for June. From Canada, so we already know that we get GDP data for May and expectations are for an unchanged rate of growth. If that is indeed the case, the reaction in the Canadian dollar may be limited. We have only one speaker on the agenda, Minneapolis Fed President Neil Kashkari. For more information, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.